Hi, everyone. This is John DeRelay, Head of Revenue Management Education at Wheelhouse, and we're going to do another session of our micro-market magnifier and take a look at the data for Navarre on the Florida coast. Really excited to dive into this data. We're going to take a look at what the kind of occupancy situation looks like right now, what the pickup situation looks like and really see if we can get some good insights as we're starting to hit the booking window for 2025. Today, briefly, what we're going to take a look at is the overall kind of just market report for the area, just look at some high level trends. I've also built a couple sets, one of them for just general kind of Navarre area, looking at listings that have been bookable for at least half of last year and had an occupancy of over 50% last year. So some evidence of performing over the course of the year. We're also going to take a quick look at the 4 bedrooms. This is going to be a much broader group. We're really just going to look at everything that's available. But I do like to look at the bigger properties because their booking windows tend to be a little earlier, and sometimes we can glean things about what is going on. Let's start out by looking at some of the high-level trends. You can see here I have the Wheelhouse market report pulled up, and we do have the Navarre area kind of pulled out on its own, what we're calling Navarre. You can see here that, quite a bit of growth in active listings year over year. That's been a consistent trend across all of these Emerald Coast markets, across the Florida coast, across Texas, across Gulf Coast as well. We're starting to see that level off. I've heard from the industry that seems to be the case, but we're still going to be experiencing that this year because there's a lot of properties that need to get booked. Looking at our occupancy trends year over year, there's quite a bit of interesting things. So right now, we're just going to look at 2023, 2024, and 2025. We do have some additional data available, and you can kind of see that we've been tilting down from that, 2021, 2022 kind of peaks. That's pretty consistent across most markets. But last year was pretty interesting because the summer itself didn't see much attrition. And the fall actually looked pretty good going into winter where there was some increases. But again, Q1 last year was pretty weak compared to the previous years. Spring seemed to drag. And looking into this year, there's actually some good news here. January is already done and it came in a little bit above. Didn't recover all the way to the previous year, but we did see some increases. As we go into February, it looks like we're at least on track to hit where we were last year. So we won't see more attrition, but we're not looking to make up that gap. Now, early on the books for March and April is looking pretty good. I mean, given that we're 3 months out, we're about a third of the way to what we did last year. So there's some chance that we can do at least what we were doing there. So, kind of the name of the game, I think, is stabilization, that this year might look a lot like last year. For everyone here, that means we really want to find opportunities to see if we can increase this performance through the spring. But what it also means is that might be a very good sign for some of this summer booking, of which we're already starting to see pretty big amounts on the books in that, May is already equivalent to April. June is almost the same as May. So of all the Emerald Coast kind of areas we've looked at, the advanced booking here looks to be pretty strong. Another trend I really like to look at here is lead time at a top level, just to see how things are doing. I'm going to turn off the 2025 because most of those dates are in the future. There is something we'll look at there at the end, but it's not too helpful when we're comparing. And in general, what we're seeing is a little bit of a shortening of the booking window through the first half of the year last year compared to the previous year. But interestingly, an increase in the booking window in the fall and winter. Now, that does make sense to me. I feel like last year, people were caught off guard by the kind of lower performance. They had rates higher. They had to sell a lot more in the short term. But because of the previous year's performance, people were already a little bit more conservative for fall. Because of spring, because of summer being a little bit more difficult, a little bit shorter, people got more conservative about the fall early. And that actually allowed the fall to be in a much better position. We also saw that those occupancies had increased as well. I think those are lessons that we need to take here, which is if you're pacing behind, you're putting yourself at some pretty significant risk because you need to beat the market, especially if occupancy is going to be competitive. Now, obviously, high booking lead times aren't always going to result in more occupancy. And that's where it's a little bit helpful for us to look at 2025 now. Really, the only thing we have to look at is January. And this is a pretty interesting note to me, is that this year, the January booking window was much further in advance. That tells me a few things because we didn't, we had a little bit more occupancy. So maybe people booked a lot earlier and that was just additional occupancy on the books. It also kind of indicates that the short-term window wasn't coming in this year too, though, because this is a low season we would expect these booking windows to start shortening a lot because you get a lot of bookings. There is a little bit of a concern here that the short window and the short-term booker is not booking as much this year. So really the only people who booked, and maybe they booked a little extra, were those people who booked early. I think if you want to be conservative about the year, you need to think about like, hey, maybe there's risks in the short-term window if there's just less short-term bookers, and you really want to make sure your properties are positioned so that you're not pacing behind and maybe even pacing a little ahead as we get into some of these earlier zones. Now, as I've said, the Navarre stuff looks pretty healthy, especially from an early occupancy perspective. So there is some there's some mixed signals here about what you might do. I would say in the short term, from January, February, March, and into the spring, maybe be a little concerned if your rate's too high and you're pacing behind, because the fact that that January booking window didn't shorten up is kind of interesting. But on the counterpoint, we kind of have the opposite, which is the summer stuff is looking pretty good. And as long as you're pacing well there, we might be in good shape. So let's go ahead and take a look at our first deep dive, and we'll look into the set I built for kind of that whole Navarre area for stuff that had been, showing evidence of being open and performing last year. It's a pretty big set. I have about 2,000 listings in this set, so it's quite a lot of data. And just at a glance, you can see that, the sales pickup being this early in the year isn't, substantially high, but we are starting to see pretty significant growth across all of the months going into the future. Obviously, the winter is remaining pretty low in terms of what's occupied, and we're starting to see some bumps up in March, which is looking really good. And pretty consistently, we're seeing dates are getting booked across the board. So all these little highlighted things are days that are being sold in the last 2 weeks. I think that all looks good. I do, looking at some of the booking window data that I have access to, at a high level, I do feel like the window is dragging a little bit. So I think it's really important for people to be aware that if you're pacing behind, you probably need to take some action now, especially with that lead time news in January that the short window really wasn't coming in the same way. But if you're already making bookings and you're making them consistently, that probably means that you're in a pretty good place, and that this market is showing some signs of being, a little bit more stable in those trends than some of the others I've looked at. Coming down here, we can kind of see how the rates are being set up across the year. Most of this is going to be what we would expect. The thing that I would like to bring up here is I like to just bring up where some of these differences might be existing, where things maybe seem a little bit interesting. Obviously, this will be what we expect. We expect low rates in the summer. Don't be too worried about the total numbers, because this is going to be a mix of bedroom counts. But I do think that there's some interesting things here through the spring. That's always important to take into account. One is, where are people actually pricing their peaks this year? It seems to be building up pretty consistently up into late spring. So that'll be important to see if that aligns with the occupancies. We see some spikes out here in the first week of April. Now, that'll be really interesting to see if that aligns with occupancy, because I know that last year that was really strong. We had Easter around that time. Easter has moved. And so, I've seen kind of in markets like this where like some people maybe haven't adapted to the way the spring is changing this year, and maybe kind of incorrectly pricing the dates that are going to be high demand, and likewise incorrectly pricing dates that are going to be low demand. We also see here that there's a little bit of a bump on the high end in Easter, but those averages aren't shifting too much. So, the spring is a little volatile, and I think spending some time to make sure you're priced right there is going to be pretty important. Moving into the summer too, we see kind of an interesting buildup in rates up to the 4th of July. I think that's going to be pretty telling about what's going on. We also see this kind of drop off with a pretty substantial drop off in August. I think this will come up a little bit more, which is, how does August and July need to drop off? Last year, summer seemed to end really early. It didn't seem like everyone in the market was really prepared for that or had really built that into their rate plans. So really thinking about, when does that drop off need to occur? And it goes back into that story about lead times. Seems to be a lot of success, especially as evidenced in this Navarre market, that those early lead times added to the overall occupancy rather than just being lower rates. Let's take a deeper dive into what those daily kind of occupancies are looking like and kind of shaping up in this graph. So I'm still on our sets. I'm on the graph section, and I've just set it for the upcoming year, and I'm showing where it ended last year versus where we are this year. Pretty interesting to note that we're building up a little bit here. But this set, even though the market was ahead, this set's falling a little behind, which is kind of interesting. This, I think, is going to be really helpful for telling us what days are important. So Already we're seeing the February 15th time period, I think that's President's Day, really starting to spike up in the set, which is a good sign. It's actually really interesting. I've looked at a bunch of the other Emerald Coast markets, and I actually haven't seen that spike very often. So for whatever reason, the Navarre area, we're seeing that, at least in the set, pretty strong. This seems to align here. This dip in the first week of March seems to be a little bit more pronounced right now. There's some booking, maybe the end of the snowbirds in February. You have, President's Day, but then this dip is really not picking up at only 14%. Now, it was pretty low last year at 54, but the evidence is showing us that this is already a date range that's going to be weak. And so if you're holding any rate there for any reason, you might just be missing out on market share because there's not going to be enough to go around necessarily, and you need to capture people whenever they're looking. Looking at the next few weeks, I think what's really most telling here is the shape of what's getting sold already looks different than how it acted last year. And so if your rate plan is really built off of how things worked last year, you might be missing opportunities to raise rates. You might also be overpricing certain dates. So the first thing to note is the three big peaks were the 12th, the 28th, and the 4th. This year, they seem pretty consistent and in chronological order. It's the 10th, 17th, and 25th, with the 25th actually being the one that's pacing ahead. Now, the biggest mismatch here is this date around the 18th. There seemed to be a dead week last year, whereas this year, there is no dead week. And so if that's underpriced, you might be missing opportunities. On the other end of the coin, that first week of March is not picking up in the market. So if you're pricing that like because it performed well last year and you're expecting something high, that revenue seems to have moved into the middle of March, and you need to be adjusting for that. Another notable thing, too, is we're not yet seeing a huge spike for Easter here. Now, we saw some of the spike in rates, maybe something to think about. I would expect that people would book this a little later, but it's not yet appearing in the data, and it is, in fact, starting to trail a little bit behind some of the late May, early June stuff. Now, other than that, the kind of early summer booking is looking pretty good. Hard to tell how that's going to shape up. We're pretty early, but it does look like it's kind of packing on revenue, so not much to say there. I think this springtime kind of mismatching and figuring out what dates is going to be really key to know what dates to optimize in your portfolio. One thing I wanted to do is just check back over here into the full market report and just see if some of those trends are existing here as we saw before. And I think we are seeing that. You can see this gradual step up between March 10th, March 19th, and March 24th. A trough over and a mismatch over this April 2nd. And even though we're seeing some booking over the Easter holiday, it really doesn't look different than the weekends around it. And so we're not seeing a spike yet for that date range. And then actually the summer's looking better than what was in my set. It might be because my set performed last year. They might be priced a little too high. So overall, I think that just validating that this concern is a real concern, that the actual dates that are going to be important for the spring next year might be a little different, and there could be some really serious opportunities for your team there. Last piece I wanted to look at with you guys is just a little, look at the same view, but really just on the 4-bedroom plus. This is going to be about 1,000 listings, and I'm not including listings that had a history of strong performance. So it's really just everything so we can get an idea. What's interesting to note here is I'm not seeing that much more of a difference in terms of the early booking, which means that most of the early booking is probably coming through in this groups of units. Looking at the rate side, this is probably the most interesting thing to me is how smooth the spring is, right? There is much less differentiation at this higher end property level than what we saw when we were looking at all properties together. And I actually think that that's a strategic disadvantage for everyone. We know that there's low demand date ranges, and we know that there's high demand date ranges. And the fact that these properties that are going to be a little bit more rare, they're going to take a lot more planning, aren't differentiating the pricing means that they're probably missing opportunities here. My guess that spring is coming in close is, unless you're, it would be harder to raise it, but I think the key here is really finding the dates that aren't going to be as high demand and lowering those early, because stealing market share is going to be the name of the game. I think particularly through some of April, that's really important. And it may be that, we're not seeing this gradual buildup into June. So that's pretty interesting too. So I'm wondering if that early June period might be priced a little bit too high. Likewise, we also see a much slower drop off in August. And I would actually expect that to be kind of the opposite. Normally, what you see with these really large properties is you see much more differentiation, where the lower dates are much lower compared to the higher dates being much higher. The fact that this is smooth means I think there's a lot of opportunity here to take market share, because if the market really is like expecting like, well, these are 4 bedrooms, they're high in demand. Well, it's also much harder to fill a 4 bedroom during a period where not a lot of people are traveling, because you need to get a whole group together. So really finding those areas that are expected to be low occupancy and positioning these properties correctly, I think is going to be key for just beating the market with this segment. So just looking at the kind of occupancy situation by day, kind of where we were previously, I like to kind of look at this too. Sometimes what I would expect to see is things to be a little bit more extreme, like I mentioned in the rates. Interestingly here, obviously going to be a lot less occupancy during the high season. Now, this shape is a little different. We do still see this step up and it being smoother, but it's not as clearly just a step where you're like, hey, this date's good, then this date's better, then this date's the best. It's kind of averaged out a little bit over the dates. It's still evidence that all of those dates we discussed are going to be stronger. I'm wondering here if this date that did really well last year, the 12th, is actually maybe dragging a little bit because it might be priced a little too high. And my guess here is we're also seeing a little bit longer stay pattern because it's not so segmented. So really thinking about where your weekday position is or where your total week rate for these larger properties probably is going to be pretty important. Interesting to note here too, we see that break down a little bit when it gets into April. Again, Easter's not really spiking up. Interestingly, last year it was much weaker in this segment of listings, and we're really just getting the shorter stays. So again, it goes to, when I was looking at the rate situation, I was concerned that the rates were just too smooth, that there wasn't enough differentiation. And the fact that these are different, I think, is supporting this idea, particularly in these lower seasons like April, early May, where your weekday price might be too high, and there might be huge opportunities if you're able to bring that weekday price down. You might be able to not only book those weekdays, get longer stays, get them on the books earlier, but not let your calendar get broken up by these shorter stays that seem to be just grabbing for the weekends. Another kind of final interesting note here is Memorial Day seems super strong already in this group. Makes sense that people would book for this holiday early. We're not yet seeing much in the way of the 4th of July differentiating itself, but Memorial Day looks to be going strong. So take a look in your own portfolio and see if your big properties in particular are starting to book for Memorial Day, and just make a point to keep track of that so that you can optimize the rates there. Hope all this information was helpful for you going through Navarre and all the other sites that we went to on the Emerald Coast where we looked into market data. We look forward to doing this again with you, and keep in mind that all of this data is accessible in Wheelhouse, whether you're using our market reports or our dynamic sets. And if you need any help with it, please feel free to contact our team. We would be happy to walk you through it. Thanks. Bye.